Hello everyone, welcome back to the Nat CPA channel, where we make accounting, taxes, and finance easy to understand. Today we're answering a question that many of you have asked. What are payroll taxes and why are they so much? Hi, I'm Dion, a CPA licensed in the states of Maryland and Virginia, and also the president and CEO of Norris Accounting and Tax Services. And I want to talk to you about a very important topic for business owners, and that is payroll taxes. And when it comes to payroll taxes, what we see is either the lack of understanding what they are, or the question is, where do I even begin to set them up? So what we're going to do in this video is hopefully explain in less than 5 minutes to give you the foundational understanding of what they are and what you need to do to set up your payroll. There are 4 things required to set up your payroll. Number 1, you will need an employment identification number, also known as an EIN or FEIN. This is a number that you get from the IRS identifying your business. Think of it as a social security number for your business. Number 2, you'll also need an identification number from the states that you operate in. This is called several different things. In Maryland, it's called a central registration number. Your state may call it something different, but it is what identifies your business with the state that you're operating in. If you're operating in multiple states, it identifies your state in that particular state. Number 3, you're going to need an unemployment number for each state that you operate in. Number 4, and the final requirement is that you're going to need some type of workers' compensation insurance. This can be through any agency. Just make sure that you check with the insurance company and that you're getting a policy that fits your company the best. Now that we discussed what you need to set up your payroll, let's talk about what payroll taxes are. Simply put, they're the taxes that both the employer and employee pay on wages, tips, and salaries, in addition to any federal, state, and local income taxes that may be owed. Let's clarify this a little bit further. Employees are responsible for federal, state, and local income taxes, as well as the employee portion of Social Security and Medicare taxes, more commonly known as FICA taxes. The employer is responsible for the employer's portion of Social Security and Medicare taxes, as well as any federal or state unemployment taxes. Now let's visualize this a little bit further in a hypothetical situation. Let's imagine that you receive a $5,000 paycheck, and it breaks down as follows. The employee is responsible for 10% for state income taxes, 15% for federal income taxes, 6.2% for Social Security taxes, and 1.45% for Medicare taxes. The employer is responsible for 6.2% for Social Security taxes, 1.45% for Medicare taxes. Now that we have a foundational understanding of how that process works, here's something else to remember. Employers in most situations send both the employer taxes and the employee taxes to their respective taxing entities. One important thing to remember is that these taxes remain in your operating account until you, as the employer, send them, which depending on your company's filing frequency will either be monthly or quarterly. So hopefully you learned something today to make it easier to understand. Also, don't forget to hit that like button, subscribe, and get notifications. You can also find out more by following all of our socials. Until next time, remember, we are a trusted partner you can depend on.